I'd be pretty foolish to go into the Japanese market and invest it. I obviously would be looking for a co-investor, a partner, and with that much money, I would be looking to buy a diversified portfolio and perhaps turn it over, whomever, to Zymax. But I would be all in Tokyo. I would be diversified across property types, and I would want a co-investor, and I'd be extraordinarily concerned about the my asset manager, my property manager. I mean, that's not a precise rifle approach answer to it, but I would want to probably be at no more than about 40 to 50% leverage, which gives me firepower of €1 trillion, okay? That would make me a dominant player. And I would probably suspect, and maybe that's because of a U.S. mentality, that my exit plan is the public markets.
From our experience, I believe that I know that the middle size Tokyo office is very safety and stable. So because Zymax Corporation actually has gotten doing a master lease business as well for to the middle size of buildings in Tokyo and doing like 25 buildings in Tokyo. The track record for the more than 10 years, it's very successful and stable. So I rather to buy such kind of middle size of office building in Tokyo and should be putting like 15 to 20 properties on it. So it should be very ideal for me. I know that in the track record too.
I think Japan is just right for this sort of strategy, and two key themes is diversified and diversified by style, so core plus with a higher leverage, so sort of core value added we'd say, and opportunistic, and also the public market, despite the comments about it being correlated with the equity market, because to get hold of or access to those trophy buildings, you have to invest with the Mitsui, the Mitsubishi to access those. So I think diversified across the styles, and also phased over time. Given this huge uncertainty, it's not a matter of slugging it out, it's over a 2-3 year period.
Yeah, if you look at the market, it's necessarily the highest returning strategy. It's the one that Grosvenor's got expertise in. I'd put money into the residential sector, and I'd probably put half the money with some gearing into a luxury residential development, small, very high end, of which Tokyo's, as I've said, curiously seems to be undersupplied. I quite like the mid-market, with the drifter population into Tokyo. There are ample opportunities to buy tired buildings and upgrade them and make them cater for kind of professionals. We also quite like the kind of corporate dormitory type property as well, which is sort of bespoke residential property for kind of long-term and medium-term company lets as well. So I see quite a lot of opportunity within central area Tokyo residential. And maybe I'd diversify across segments within that market, but that's what I would do at the moment. With a Grosvenor hat on, I probably wouldn't put leverage much below 50%, much more than 50%. With my own hat on, I'd be pushing that leverage a lot further than that, particularly at the moment, maybe up to 80%. It's just, I think, probably a sweet spot in the capital markets now for leverage.
Great, thank you very much.